Do you want to win with your money? I see people struggling every single day. And do you know why? Well, for the most part, it's because they don't understand how their money works. The fact is, you cannot improve anything that you're not aware of. That's why I made this series, Understanding Your Money, to help you have a better grasp of the most important financial concepts that you need to understand in order to be successful with your money. Now, I created 30 bite-sized videos teaching you everything you need so you can make the best financial decisions in your life for you. Now, without financial freedom, there is no freedom at all. So make sure that you subscribe so you don't miss any of the videos in this series. Also, if you find value in this, please share this video out and this playlist out because of the fact that I know it's gonna help so many people. As we're entering this recession that's coming right now, actually, I would argue we're already in it. This information is more important than ever, so let's do this. Hey, what's up, cash flow hackers? It's Chris with Life 180. We are doing the Understanding Your Money series here. In today's video, we're talking about understanding the time value of money. This is the equation for how to calculate the time value of money. But before we get to that, let's talk about what is time value of money from a real basic understanding. Time value of money is simply saying, okay, your money today is worth more than it's going to be worth in the future. So it's basically an inflation adjusted number for what your money can do for you, right? So what is your money worth today? So we look at it like this. We say, okay, I have $100. That $100 can buy me a certain amount of goods. So you can see this equation is present value, PV, equals future value divided by 1 plus the R is the rate of return. So now it's either a rate of return or the rate of inflation, right? So when we look at this, we have to equate for the fact that you can look at this from an inflation adjusted average perspective, or we can look at it and say, how are my investments really doing for me? So when you look at what this equation does for you, it says, okay, the present value is simply equal to the future value divided by 1 plus the rate of return. And when you look at that, what this is showing you is saying, if you got 1,000 here and this number might be 1,100 for future value, but it's not all going to be just pure gains because you got to account for inflation and the return, and it will tell you actually what the value of that money in today's value is when you account for that, if that makes sense. Let me break it down and make it really simple, because I know as much as I like stuff of this nature and formulas and whatnot, I like to keep it as simple as possible. So what we do is we say, if you go back to understanding the rate of return, or the how inflation, the rule of 72, and all these things impact us and our money. Remember, the rule of 72, and I think it's important to understand this, I'm gonna touch on it again, is if we have a rate of inflation of 4%, remember, since 1971, the average rate of inflation has been 3.92%. So if we look at 4%, just to keep numbers round, we go 72 divided by 4. What is that number? It's 18. There we go. I think it's 18. So we know that every 18 years, our money is going to double, right? So when we look at that, it's 18-ish years. So when we look at the fact that 18 years, our money is going to double, we know that the time value of money 18 years from now, that number is going to be, we need $2,000, right? So that's really all this is saying, is that the time value of money is saying $1,000 is worth more now than it is worth in 18 years. It's really that simple. And so now when you understand the time value of money and you start to realize, okay, once again, it's not just what it is, it's why does it matter to you? How does it impact you in your life? You know that when you have this $1,000 today, it's worth more, but then the question becomes, well, how much more are you gonna need? Because the biggest mistake that people make in their financial planning, in their future planning, is planning for today, things in today's nominal dollars, right? If you go back to the videos I did on inflation and the rule of 72 and the 4% rule, those 3 videos specifically really speak to this point, saying if you make $50,000 today, right, 18 years from now, you're going to need $100,000, right? So the time value of money is saying $50,000 is worth more today than it is then, because that, you're going to need this 100,000 to be able to maintain your purchasing power, your standard of living. And so when you look at it from this lens, what my suggestion to you is understanding that this has a real significant implication on your retirement, on your planning for the future, and realize that you can't be trying to get to $1 million of savings or whatever it is, planning for $50,000 of income. You have to think ahead of time and say, okay, with my current standard of living, what am I going to need based on my time frame, my window getting to retirement? But I think where people also miss it is they say, okay, we know that if you're, say, 30 years old right now, you got 35, 36 years if you're following traditional retirement planning methodology, even though I would argue that that's probably not even right if you follow our cash flow investing strategies, but this is what most people do, right? So they go 35, 36 years, gonna retire at 65, 66, something like that. You know that you're gonna double this twice. So you're gonna go from 50 to 100, 100 to 200,000. So you know by the time you hit 66 years old, you need $200,000 is your number, right? So if you're banking on getting to $1 million to pay for your 50, no, you need to realize that 50,000 is 5% of $1 million. So what is 5%? And if you follow the 4% rule, it's 4%, but let's just keep it simple for this conversation. That 200,000 is 5% of what? Let's just do the math here. Open my calculator, 200,000. Keep hitting the wrong button. $4 million, okay? So instead, I guess I could have just multiplied it by 4 because it's the same thing. $4 million, right? So this is saying if you're banking on having to get to $1 million, you have to, because of the time value of money, because of how all the math, because remember, the time value of money is how it impacts your life. The rule of 72, the 4% rule, these are the things that help you calculate how it impacts you. And this formula right here is just, another formula that will help you do that. Honestly, I think it's more complicated than it needs to be. But you need to start thinking about things in terms of this is your number, not this number. Because if you're banking on 50,000 being your number, you're setting yourself up for failure. And that's why I think a lot of people undersave for the future compared to what they need to, because they're just not ready for it. And so anyway, that is it. It's not any more complicated. We don't need to go on and on and on about it. If you have any questions, let me know in the comment section below. I'll do my best to engage with every single one. Once again, this whole video series, if this doesn't make sense to you, if this is the first video that you're seeing on this, go back and watch the video I did on inflation, the rule of 72, the 4% rule, and that really breaks it down in a systematic way that's going to help you understand this stuff on a deep level. Because once again, it's not just what this is and the time value of money and understanding it. The reason I'm doing this is because I want you to understand these phrases, like time value of money. What does it mean? You're going to have financial professionals using it when you're talking to them. I want you to be an educated consumer so you can have higher level conversations with the people, so that the words that they're using make sense to you when you're in those conversations, when you're talking to a financial advisor, when you're talking to real estate investors, when you're talking to people where you're putting a good chunk of money on the line. You need to understand this stuff. And so these basics play into everything, and I think it's important. So anyway, that's it. Comment in the comment section below if you have any questions. If you haven't already, subscribe, go down, make sure you check out the playlist, hit the bell, that way you're notified when we come out with the next video in this series. And until next time, have a blessed, inspirational day. We'll talk soon.